Well, if you missed the march back toward all-time highs, fear not. The Chartmaster is here with three names that could be ultimate catch-up trades. So let's get straight to Cornerstone Macros. Carter Braxton Worth. Carter, what are you looking at?
You bet. Well, I mean, I have three stocks, but here's the thing. Each of them is up 100% off the March low. That's double the S&P. So are they laggards or are they leaders? It all depends on what your time frame is. Let's start with a few charts. The first is HANESBRANDS. All right, underwear, t-shirts. Take a look at the chart. It's a long-term established downtrend. And then, again, this stock was 7 in its low. It's now almost 16. It's trouncing the S&P. But of course it's a laggard, because if you're down 30% still over a 2-year basis and the market's back to or close to all-time highs, you're lagging. And so this is the kind of thing we're looking for, something that is behaved very aggressively, but most importantly is broken above the downtrend line in effect for the past 2 to 3 years. Look at the next one, DuPont. It's the exact same circumstance. In fact, the exact same move off the low. DuPont was essentially 28. Here it is at 58. 100% move, twice the performance of the S&P. Is it a leader? Well, it is for the bounce, but it's a laggard. If you're still down 30, 40% over a 2-3 year period, this is what a catch-up trade can look like, and just now breaking above the downtrend. Final one, look at STLD, a steel stock. It's the exact same circumstance again, and there are many like this. The key is that they're laggards because they're down still 30 and 40+% from their highs of 2-3 years ago, but their day-to-day and since the March low performance is aggressive, and each one of these was very big today relative to the market. The fourth chart, it's a comparative chart. So take a look at all three. I mean, they look like railroad tracks. I didn't overlay it, I didn't manipulate it. It is what it is, and they have nothing to do with one another. One could say, well, DuPont, steel do, they're cyclical. It's not about that. I could throw certain tech names in here as well. And then the final chart, it's the same comparative chart of these three stocks, but shows, of course, the S&P 500. So here on a 2-year basis, these are tremendous laggards that are killing the market since the March low and are killing the market today. More to come, I think, to the upside for each of these, and there are others.
Carter, thank you, as always. Carter Braxton Worth of Cornerstone Macro. Guy Adami, which of these three do you like?
You know, I mean, you know, because you're in my head, you know, it's
HANESBRANDS.
HBI. Of course it is. Yeah, of course. And by the way, Carter, we're allowed to talk about Mount Rushmore.
Why,
this
of course.
weekend is on the Mount Rushmore of technicians. What? Because it's, of course, Tim. That's why, because you're a Steel Dynamics guy.
Yes.
And Karen and Dan can whack up DuPont. But quickly about HANESBRANDS. Go back and look at that quarter. Their operating margins came in at 17.4%. I mentioned that because the street was looking at operating margins of about 3.5%. They crushed it, which means analysts are going to have to raise their price targets. Bank of America recently upgraded the stock to neutral from underperform. They're probably going to have to upgrade it again. And I think to Carter's point, despite the fact that it's moved significantly, there's more room to the upside.
All right.